Welcome back. Let's kickstart our show with a lot of corporate voices now. It was a strong set of earnings that we got from Texmaco Rail Engineering for Q4. The EBITDA was higher on the operating leverage, and the steel foundry and rail EPC business provided a boost to the EBITDA. The revenues and profits also saw a strong surge this time. Hemant Bhuwania, who's the CFO of the company, joins us now to talk more about that. Hemant, good morning and thanks for joining in. Can you outline for us what FY24 could look like in terms of growth? I mean, it was a good growth that you saw in the full year, so about a 38% growth on the top line. You're sitting on a base of almost 2,250 crores. What is the realistic growth that you're looking at in FY24?
Good morning and thanks for the invite. It's a pleasure to be on your channel. So for the March for the financial year 23, we had in Q4 we did around 1,400 wagons, whereas in Q3 we were close to around 1,000 wagons. So there was a ramp up of around 40% during Q4 of the last financial year. From 1,400 onwards, we expect a further ramp up of around 25 to 30% in first half of the current financial year. And again, from in H2 of the current financial year, we expect another ramp up of around 25 to 30%. Railway being a buoyant market, we are getting inquiries from private sector too. So we expect that financial year 24 should be a good for entire wagon industry.
All right. Good morning, Hemant. Thanks so much for giving us those details in terms of production. I think you were hinting as well on a monthly basis, you're looking to get past that 500-600 wagons. So it appears you're pretty much on target. But give us a couple of more details in terms of revenues. How does this translate? Last year, I think you ended at around 2,250 crores. So for this year, what kind of a revenue number will we be looking at? And also margins, they're still, in the mid-single digits, a little higher than that. What's the range we should work with for the coming year?
Absolutely. So we were around 3,200 wagons in the current financial year. So you expect a growth of around 30% from here, or 30 to 35% from here should be for the next financial year. Converting to numbers, on an average, one wagon costs around between 5 to 45 lakhs. So we could get the numbers from there. On EBITDA margin, you see the orders which we have got from railway, 20,000 plus wagons in last year, which we are executing currently. So it is at a very thin margin. So everything depends upon the number game. The higher the production you do, the better EBITDA goes. So it's totally on the number game.
Sorry, just to get the number, FY23 revenue growth was about 38%. What will the growth be in 24?
So you from here onwards, you expect another 30 to 35% growth.
That's on the volume number, sir, right? Or you're talking about the revenue number itself?
Or see, volume would be totally commensurate with the revenue. So if your volume goes up, the revenue goes up as well.
Oh, so around 2,900 to around 3,000 crores is what we should look at.
Yeah, for our heavy engineering division. Again, we have our steel foundry and rail EPC division also. So there also, we were doing to the tune of 1,500 metric ton of railway castings last year, which in current year, we have achieved around 2,500 tons per month. And we expect a further ramp up of around 30 to 35% in foundry, with some minor capex and minor modification being done. So in foundry, again, you expect a growth of around 30 to 35% as well.
So your total order book currently, at the last number we have, is about 9,300 crores. Can you give us an updated order book figure, and what is the order visibility like across, your various segments?
Yeah, so current order book is somewhere around 9,000 crores, out of which we operate in three segments, that is heavy engineering, steel foundry, and our rail EPC division. So order book for heavy engineering is to the tune of 6,700 crores. For steel foundry, it is around 400 crores. For our EPC division, it is 1,500 crores, and the subsidiaries and joint venture is another 400 crores.
And any targets on the export front? I think earlier you had talked about a 500 to 600 crore number coming in from exports. Would you want to change that in any way? What's the visibility like?
Yeah, sure. So last year we executed a gondola wagon export to Africa, and we had received a certificate of appreciation on the quality. So again, we expect a repeat order from them for around 300 to 400 wagons this year I think the order should be materialized within next couple of weeks, and that would be executed in this financial year itself. On a steel foundry front, since most of the railway castings are being used captively by our heavy engineering division, so we have restricted the export to same levels. So foundry would again be at the tune of around 90 to 100 crores per annum.
All right, we're going to chat more. Thanks very much for joining us, though. Appreciate you joining in. So you're projecting a strong outlook for FY24 as well after a strong FY23. There's no dearth of work in railways and allied sectors. I mean, there's, of course, the actual rolling stock, but there is also modernization of railway stations, etc. I mean, some have said, well, the work is there. The budgeted amounts, both in the fiscal sort of big union budget and how it trickles down, is massive. But is there capacity to build out at the same pace? Capacity, I mean, actual capacity, factory capacity, also people. So that's another longer discussion. For now, numbers and guidance looking pretty strong from Texmaco. We'll take a quick commercial break here. We'll be joined by Sudarshan and Mitesh on the other side. Prakash is with us as well. So we'll go across to them in a bit.